Hi, it's Marc from Fluent Finance Abroad, and I just want to mention 3 things that I think agents should consider about when they're talking to clients about Spanish mortgages. Number 1, a bank or a mortgage broker can help you really qualify your client to know exactly what their budgets are and how quickly they can move. For example, a client may come back and let's say to you they have a budget of $500,000 or 1 million, but they have to sell a property in their own country first. A mortgage broker or a bank will have to understand where the funds are coming from and when those funds are going to be available. And at Fluent Finance Abroad, we spent the last 20 years fine-tuning our questioning to clients to understand the clients and their ability to purchase very well. So we can help with understanding the client and their capabilities. Point 2 is that when you first engage with a client is to try and encourage them to actually get an agreement in principle, which is where the mortgage has been studied and formally approved by a recognized lender. And so therefore, when they do come to Spain and you are showing them properties and you are hoping that they will put forward a formal offer, the mortgage, the financials, the money side of the transaction has already been organized. They should know before they start viewing if they're going to buy cash or if they're going to get a mortgage. And if they're going to get a mortgage, it should be already organized so that when you are negotiating with a vendor, you have the confidence that the client, your buyer, is able to close quickly. Point 3, and this is quite important, is that everyone seems to assume that 70% is the norm for non-residents. That is the absolute maximum. That isn't the norm. The norm is generally between 50, 60, 65%. Very few clients are able or want to get the top tier of loan to value because the 70% is generally available for very high profile clients. The banks that do offer 70%, generally the interest rates are a little bit higher. So when you are speaking to clients, be a little bit cautious, be a bit prudent, obviously say that 70% is available, but be aware that some of the better terms, better interest rates will be available at the lower loan to value because of the risk assessment from the bank. One thing that's also that needs to be factored in is that Spanish lenders will not finance a client's taxes on a purchase or legal fees or any associated costs. Spanish banks will only finance the actual property itself, the bricks and mortar. When you're calculating or when a client is calculating how much cash they need to bring to the table, it's always based on the purchase price. So it's really important that we don't factor in the 10% closing costs if it's a resale or slightly more if it's a new build. So those are the top 3 things that you should consider when you're speaking to new prospects.